Mainly because of how much debt's in the system. And so if we back up a second, basically the Fed has, kind of two competing forces right now. So on one hand, they're the furthest behind in inflation they've been since 1951. So CPI is, 7%, rates are at zero, and so they're very far behind the curve as measured that way. The other side of it is that most measures of economic growth, like so, for example, Purchasing Managers Indices, forward quarterly GDP growth rate estimates, those things are rolling over. They're softening, and so they're not necessarily pointing to recession, but they're pointing to a deceleration of growth. And historically, the Fed is most able to tighten policy into periods of economic acceleration. So PMIs going higher rather than lower. In fact, part of what caused so much market turbulence back in late 2018 was that they had been hiking the rates during that rising PMI environment, and then as PMI started to roll over, they kept pushing it, and eventually, the market gave them pushback. And so they're in this kind of tough position where inflation says to hike and the economic growth rate says soften. And they're already, near as dovish as they get. And then the kind of the macro backdrop for this whole thing is that with federal debt to GDP well over 100% and private debt to GDP even larger, basically that if they were to normalize to structurally positive real yields, so several percentage points of real yields, the interest burden would be very massive on that debt. And so the last time we were in this position was back in the 1940s. That was the only other time the U.S. federal debt to GDP was this high, and you had a period of financial repression where they held rates low despite the fact that inflation ran hot because they had little other choice.
So do you think they're going to reverse course and that's the strategy they're going to do?
I think my base case is that we're going to have negative real yields for most of this decade. Now, there can be brief periods where you have, say, a deflationary event. You can have these cycles, but I think that's the baseline going forward. And again, like you pointed out, that doesn't mean they can't hike. I think they certainly can taper the balance sheet. I think they can get some hikes in, but I think it's going to be relatively shallow compared to how much inflation's in the system.
Okay, so that's interesting, Lynn, because a lot of, experts I've been reading, insiders, call them whatever you want, say that if they can hike, half a percentage point, that should be the magic number to tame inflation. Do you not agree then?
I think whether inflation is tamed is mostly outside of the Fed's hands. I think there's other variables. So a big drive of inflation was the fiscal stimulus. And so as that pulls back to some extent, right? So we're not getting more and more stimulus checks going out. We're getting kind of that fiscal pullback. That should contribute to some disinflationary pressures, maybe within this larger inflationary context. The other thing to watch is what happens with energy, fertilizer, these types of key commodity inputs. And so on that side, you have supply-driven inflation. There's not been a lot of investment in those areas, especially energy. CapEx has been very low. Oil discoveries have been very low. There's not a lot of resources going to even the energy infrastructure, so the pipelines and the transportation infrastructure. And so we have a lot of shortages in that area. And I think that's more structural throughout the decade. And so I think we're basically going to have these ebbs and flows. The Fed can reduce demand to some extent, right? So they can slow down economic growth, but then that has its other set of problems. And so I think their tools are somewhat limited, and it's more about watching the fiscal side and watching what happens with some of these supply issues and CapEx.
It just really seems that they're backed up into a corner now. To say they're in a pickle seems like an understatement. So how does this translate? What does this mean for U.S. equities, Lynn? What's your outlook for U.S. equities?
So because they are trying to tighten, and given that the PMIs and other economic indicators are decelerating, that's not a very good environment for equities, all else being equal. And I avoid giving specific year-end price targets for, say, the S&P 500. If you look at, say, Wall Street, there's almost no correlation between price target estimates and the actual outcomes. Instead, I just give a general outlook of whether or not the conditions look very favorable or not. And so over the past 2 years, we've had very strong, almost straight up in terms of large cap equities. But my outlook since December recently has been that 2022 looks like a much choppier year. And that could be maybe it chops sideways, maybe it goes down, maybe it goes up at a slower pace. So I don't have a specific view other than that I think it's going to be a less attractive environment for equities than last year and the prior year were.
So, for investors watching at home, what is one to do, given your forecast? If it is choppy, is it best to wait on the sidelines? Is it a wait and see environment? What do you do?
So I rarely make, kind of sweeping portfolio decisions. There's all sorts of tax implications with that. But I overall view that this is an environment for defensiveness. And so that can include having hedges, that can include raising cash, and that can include being diversified into other assets. So, for example, I still think that there are reasonable choices within the value sector. I think precious metals are attractive. Bitcoin had a large sell-off, and I think that, I think that's also probably going to have a choppy year, but it's more in value territory now. I think some emerging markets are reasonably attractive. And so I think if someone is diversified and rather defensive, they can avoid some of the more severe scenarios while still participating in some of the markets that are actually pretty cheap and that have some growth.
You've been very vocal on the topic of Bitcoin and gold, so let's go there. You mentioned precious metals as a hedge. So you like gold as a hedge right now?
I think it's a reasonable hedge. Basically, that would be a play on the Fed not being able to tighten as much as they're forecasting and that the market's pricing in. If that event starts to occur, you probably would expect a weaker dollar, stronger gold, maybe bounce in some emerging markets. And so I do like some of those plays. You can consider kind of emerging markets to be the more volatile, growth-oriented way to play it. So, for example, I've been bullish on Brazilian equities. I think if you look around broad emerging markets, especially emerging market value, they're reasonably attractive. But of course, they have, there's a lot of risk. There's a lot of volatility. Gold is a somewhat less volatile choice, a more defensive choice. It generally does well in economic decelerating environments, especially if the Fed is forced to be less hawkish. Even if they're still being hawkish, they're still tightening, but maybe less aggressively than the market priced in.
As tensions between Russia and Ukraine escalate, could this be a black swan event?
Oh, absolutely. I mean, gold tends to move on these crisis events. Over the longer run, it's really about what happens with the currency. But if you have, if this disrupts energy, it seems like it's going to disrupt fertilizer to some extent, to the extent that it causes inflationary pressures, especially stagflationary pressures, rather than that kind of, pro-inflationary kind of, bounce back type of scenario. If it's actually more of a stagflationary supply side issue, that can be quite good for gold. And so it's one of those kind of tail risk diversifiers in a portfolio.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much, much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.